Welcome to Finpod, your daily pulse on the markets. I am Evan, and today we are cutting through the noise to get you the signals that actually matter. Finpod is brought to you by Fintwit.ai, the platform for real-time trading signals and institutional-grade insights. Let's get right into it. NVDA is the story of the morning, surging over 6% in pre-market trading. This isn't just a move, it's a structural reset. The company blew past expectations, with revenue more than doubling year over year. And crucially, they projected 70% revenue growth for the next fiscal year. CEO Jensen Huang signaled that supply, not demand, is the bottleneck, effectively silencing the recent market anxiety about an AI slowdown. Also trending is Salesforce, up over 10%. This is a significant re-rating after they delivered a massive earnings beat, and more importantly, proved that AI is actually driving customer spending, not cannibalizing it. They announced a new integration with Anthropic called Claudeforce that has analysts scrambling to update their models. CrowdStrike is also rallying, up over 9%. They crushed their second quarter expectations, with management pointing to a clear arms race in cybersecurity, where AI-driven threats are forcing enterprises to spend more on protection. And finally, OKTA is soaring nearly 18%. They beat on both top and bottom lines, with the CEO highlighting that identity security is becoming the cornerstone of the AI agent economy. Looking at the broader market, futures are pointing higher, led by that massive move in the tech sector. The big macro headwind remains the same: persistent inflation. We saw core PCE data stay sticky at 3.3%, which is keeping the Fed in a tight spot ahead of their upcoming meetings. Investors are now pinning their hopes on Kevin Warsh's speech at Jackson Hole tomorrow for any hint that the Fed might finally be willing to hold rates steady in September. Global markets are digesting this, with Asian tech stocks finding some life on the back of the NVDA news, while European markets are a bit more muted as they weigh the implications of stalled disinflation. In the AI economy, the theme today is clearly full-stack integration. We are seeing a shift from simple model adoption to actual agentic AI deployment. S&P Global Ratings just released a report highlighting that hyperscalers like Amazon, Microsoft, and Google are projected to spend over $1.3 trillion on AI infrastructure by 2027. This confirms that the CapEx cycle is not just alive, it is accelerating. We also saw Google Cloud partner with Clearlake Capital to bring their full AI stack to portfolio companies, further cementing that the real money is being made by those building the infrastructure layer. Outside of the big AI names, keep an eye on Dollar General and Dollar Tree. Dollar General is up nearly 6% pre-market, while Dollar Tree is seeing a sharp decline of nearly 7%. This divergence in the discount retail space is telling a story about consumer health at the lower end of the income spectrum. Also, watch for Autodesk reporting after the close, as their subscription metrics will give us a read on how AI-driven workflows are impacting enterprise software design budgets. To wrap up, the market is currently riding the wave of a massive AI earnings confirmation. NVIDIA has proven the demand is real, and the software ecosystem is finally showing the monetization to match. Inflation remains the primary risk, but for today, the tech momentum is winning. Thanks for listening to Finpod. If you want to get ahead of the noise, visit Fintwit.ai for the tools that keep you on the right side of the trade. Don't forget to like, subscribe, and drop a comment below on what you want me to cover next.